welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, you know that this is the show where you get all your stock-related queries answered by the experts. But let's have a look at what the markets are up to. So Cheryl, seems like once again a quiet day for the Indian markets, but definitely we have the weekly options expiry and maybe an action expected going ahead.
Hopefully, actually, Shrishti, I'm hoping that there's some action in the markets. A very good morning to you, and it's like a listless trading session coming in for the benchmark indices. Absolutely flat is what we are trading. No doubt we did start on a positive footing. From there on, we drifted lower, and right now, as you can see on your screen, flat as flat can be. It's Nifty Bank that is at least tad bit outperforming the benchmark indices. 0.2% uptick coming in for Nifty Bank. As we speak, you have Divi's Laboratories today. You've seen some sort of profit booking take place in that particular counter. Divi's Laboratories is down about 3.5% of Nifty loser today. Eicher Motors, Dr. Reddy, Cipla are the other set of losers in trade. Talking about the gainers, then you have Adani Ports. That's the top gainer in today's trading session. 1.7% uptick coming in for Adani Ports, followed by NTPC, Tata Motors, as well as Power Grid. And Tata Motors is one stock that we will be discussing in depth in our BNSN lens segment. Let's take a look at what the broader markets as well as the sectoral indices are doing at this point in time. Our Pharma index today is the top sectoral loser. It has actually snapped that gaining streak that the Pharma index had witnessed. Today, 0.8% downtick coming in for the Pharma index, followed by Realty index that's under pressure. FMCG index also is the other one that is under pressure in today's trading session. All eyes will be on HCL Tech. Today, they will be reporting their quarterly numbers. But if you look at the IT index is trading flat in today's trading session. Talking about the sectors that are gaining in trade, then you have a power index that is gaining. You have the broader markets that are outperforming the benchmark indices. But yes, not much action seen as yet. But hopefully, Shrishti, like you mentioned, towards the end of the day, we should see some action in the benchmark indices or at least in the markets front. But all eyes for now will be on Tata Motors.
Well, yes, absolutely, Cheryl. From the auto pack, this particular stock is holding itself in green with the gains of 1% now. But talking about the longer term period, they have come up with quite a robust plan for their EV business. They have announced a capex of £15 billion over the next 5 years that the company plans to spend. And this is a little higher than what the company has been spending over the years. And even analysts feel that going ahead, when the company itself is saying that they are such big in the EV space, that definitely shows the confidence in the business opportunities that is lying ahead. But coming to the financials of the company, they do stick to their guidance that they have given earlier, although the debt-free guidance is shifted a bit, but they do expect that going ahead they will be able to achieve double-digit EBIT margin is also what the analysts are highlighting in a positive manner. But talking about their plans in the EV space, so going ahead they are having plans to launch all-electric Range Rover later this year. The pre-bookings are already open is what the company is saying. Going ahead they have plans to get electric Jaguar as well, and along with that, onto the financial front, they plan to be net cash positive by FY25 and, like I mentioned, double-digit EBIT margin by FY26. And even analysts are finding it a bit positive, wherein there has been no change in when it comes to the target price. But Morgan Stanley has come up with quite a positive commentary where they say that the JLR announcement reflects confidence in the business. There is a clear path to the balance sheet deleveraging, and that could re-rate Tata Motors and lend credibility to JLR's EV future. And Tata Motors' JLR-driven deleveraging story is something that can play for 2023, and India EV play is what they are looking for 2024. So on the back of this particular news, Tata Motors is definitely in focus, Cheryl.
Absolutely. Tata Motors definitely in focus in today's trading session. You have analysts also backing this particular theory of coming in for Tata Motors, and the worst seems to be behind Tata Motors and the best is yet to come. That is what the managing editor of ET Now and ET Now Swadesh, Nikunj Dalmia, had to say in his editor's take. What else does he believe is working for Tata Motors? Listen in.
I think for Tata Motors, the worst is behind us, but the best is yet to come. I've been maintaining that for 2023, if you're looking at a dark horse from the auto space, it really could be Tata Motors. What Mahindra and Mahindra did, let's say in 2022 and 2021 and 22, I think you could see that kind of an outperformance by Tata Motors. Variety of factors which are at play. Now we're talking about the press release. So what has come out new in terms of the press release? They're talking about new product launches in the EV space, and they're looking at increasing the capex marginally. But if you're looking at increasing your capex marginally, which means you're looking at spending more, but you're still committing to the fact that you would be looking at a net a zero net debt balance sheet in FY25 on an aggregate basis, FY26 for JLR. They're also talking about a double-digit EBITDA going forward, which means they are communicating pretty much what markets want to hear, that the deleverage cycle has started and JLR will be looking at expanding in the EV space, and also margins would expand. The business of Tata Motors is such that operating leverage for a business like Tata Motors would kick in because they got debt on their balance sheet. So could Tata Motors now be firing full cylinders? A, their domestic business is looking strong. They are number 2 player in the domestic passenger car market. CV is in a natural uptick. JLR business is getting sorted out and the deleverage cycle has started. So I sincerely feel that after almost like a 1.5 year of no performance, Tata Motors could be the stock to watch.
Okay, so expectedly Tata Motors firing all cylinders, and if we see the stock price movement on a YTD basis, that's already up 20%. So let's understand from the analyst how much fuel is left in this particular rally and how do they see the journey of Tata Motors ahead. Let me connect with our analyst, and today onto the show we have Kunal Bothra as well as Mr. A.K. Prabhakar joining us onto the show as well. A very good morning to both of you gentlemen. Kunal, firstly let me come to you because you have been tracking Tata Motors and you have been bullish on this particular counter as well, and it has performed fantastically well, already up since the start of the year. Going ahead, which are some of the targets that you're watching out for?
So I'm bullish on the stock overall. I would still maintain that bullish stance since the last couple of years have been bullish on Tata Motors, specifically when the stock was at 100 plus levels. Now, I think even as the stock nears the breakout of that 500 mark, which I believe potentially could happen pretty soon for the stock, given the spate of, given the kind of positive news flows surrounding the stock price, the impending breakout in terms of charts, my sense is that the stock would just restart a rally for itself after a phase of a massive consolidation, and this consolidation has been actually going on for the last 2 years for Tata Motors. So it doesn't come as a surprise that post the consolidation or near to the end of consolidation, you see this kind of a positive news flow happening to the stock price. A longer term investor who probably would have missed out on the stock earlier, I think they could start looking at buying the stock even at current levels. I would believe, and as well as on dips, and I've been maintaining that 400 and below have multiple times been very strong support zone for Tata Motors, and it's a good value buy at those levels. So maintain that stance. Near term wise, would look out for 500 as an immediate target, but potentially from a medium to long term basis, the upside could be significantly higher than that.
All right, so that's the take coming in from Kunal on Tata Motors, giving it a thumbs up, or rather double thumbs up, because Kunal has been betting on this particular stock for a while now. But given the way how the market scenario has been, we've entered the earnings season. With earnings season comes volatility in select stocks. But Mr. Prabhakar, very good morning to you. What should retail investors do to make sure that their wealth is protected, given the fact that the markets are pretty listless after a sharp rally that it witnessed earlier on?
Good morning. Thanks for having me here. I think there are few sectors which are starting to perform. Hotel is one such sector where I think things are turning positive. So we like Indian Hotel, Lemon Tree, Chalet. These are our coverage stock. Mahindra Holiday non-coverage stock, but still we like the way the company has been progressing. I think if the HCR turns around this quarter, I think the rally will be very strong in Mahindra Holiday also. And one more sector which we like is Realty. Realty has been doing very good in this month or in this financial year. So DLF is one which has given very good return. We like Oberoi Realty, even Godrej Property. So the top quality names is where we like. So there are a lot of sectors and things which are coming up in this financial year. So we need to be very watchful. And result season, till now didn't pan out very good, but Mastek result was a game changer. In IT, we like Coforge, Infosys after the correction. So we are very positive on few stock specific basis and few sectors also.
All right, so that's the view coming in from Mr. Prabhakar. And what should retail investors do? Also, Mr. Prabhakar shared a lot of his top picks as well in today's that you can actually look at. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we will come back with all of your stock-related queries. So viewers, don't go anywhere. Welcome back, viewers. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Today, our guests are Kunal Bothra as well as Mr. A.K. Prabhakar. And just to give you a brief of what the show is all about, this is a show, like I mentioned, we take all of your stock-related queries. We are live and we take your queries live as well. You can catch us live on Twitter as well as on Facebook, or you can write to us on the WhatsApp number that is rather flashing on the top of your screen. Remember, every time you write to us on WhatsApp, at least write your name. Also mention the stock that you're looking to invest in. If you've already invested in the stock, then mention the buy price as well as the quantity that you've purchased, and also the time horizon that you're looking to hold a particular counter, because with that we'll be able to help you much better. With that, let us kickstart with the query segment then. And the first queries that we have is coming actually from our Twitter handle this time around, Kunal, and our viewer who's written to us is Mayank. And Mayank had a particular query that he had asked on Andhra paper. He has about 3,000 shares of Andhra paper at the price of around 450 rupees per share. He wants to know what should he do with this particular counter. No doubt his view is for at least 2 to 3 years. But for now, with this holding, what should he do?
Look to hold on. I think it's an excellent in the making, because on the monthly time frame, which means spread over the last maybe 8-10 candles or say 12 months on a trot, the stock is forming a bullish flag pattern on the daily charts. It's nearing on the monthly charts, it's nearing a breakout of this flag pattern. So after almost 7-8 months of consolidation, the stock seems to be now on the verge of a breakout. Volumes have started to improve for the stock price. So the setup is very attractive. We probably have to give it more time, maybe another 4-5 months odd for this breakout to pan out. But whenever that happens, I would believe that the stock could probably carve out a new high for itself, crossing possibly above that 550 mark. So I think it's a stock which should be a worthy buy since you already stink on profits.
All right, so that's the take coming in on Andhra paper. But moving on, the next query that we have is coming in from Satya, and Satya is writing to us from Chennai. And Mr. Prabhakar, I'll come to you on this particular query. He wants to know what should he do with his IT holdings. He already has holdings in Infosys as well as TCS. But given the fact that the earnings have been jittery for Infosys, he wants to know, does this spoil the play for the long term for this particular counter?
I don't think so. No, and after correction, Infosys has become even more attractive. The large players will take the smaller players in this uncertain environment. So I think you have to be with Infosys TCS. If you want to add some mid caps, I think Coforge is something I recommended in the beginning. So you can buy that also. Tech Mahindra is something where there is going to be a new management. So he has been a very aggressive person. So I think Tech Mahindra also after the correction, the valuation looks very attractive at current levels.
All right, that's the view coming in on the top IT picks that you can look at. But Kunal, coming to you, and a viewer has Zomato purchased at the price of around 52 rupees per share. Of late, we've seen a lot of interest come in this particular counter. What the future looks like on the charts for Zomato?
See, I would believe that when all things are good, the prices also have to move up higher. But actually, that's not the case happening with stock like Zomato. On the weekly time frame, the stock somehow takes resistance at this 56-58 mark. In fact, this has been the phenomena for Zomato since the last 4 to 5 months, where in the month of February on the weekly charts, in the month of March, as well as in the recent attempt towards that 56 levels, the stock somehow happens to see some supply zone for itself. So your strategy has to be two-pronged. One is wait out for the stock to maybe come back towards 50 levels, where would be a classical risk reward to buy. Or else, if you're looking to buy it on breakout, then buy the stock above that 56.5 or 57 breakout. Whenever the stock closes on a weekly basis above this level, that's a time where I think you should look to enter into the trade and look out for a stronger upside post that.
All right, so that's the view coming in on Zomato. But on that note, I believe we'll just slip into a break on this edition of Buy Now, Sell Now. When we come back, viewers, we'll start taking some more of your queries. So don't go anywhere, stay tuned. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of his stock-related query. And this one is coming in from Pradeep. He's writing to us from Dubai, and Pradeep has Indiabulls Housing Finance, about 1,000 shares at a price of 151 rupees per share. Kunal, what should his strategy be right now in this particular counter?
Well, it's been a disappointing stock, frankly, in the best of the markets as well as in the toughest of the market conditions. The stock has underperformed. And that's one of the bigger concerns for Indiabulls Housing, and that's why I would probably believe that maybe if the recent history is something to pan out, then I think the stock may probably get into a further phase of underperformance. But then I think it's always best to try and play with levels over here, because we never know when the stock from being an underperforming stock would actually start to come back into an outperforming zone. So my belief is that possibly if Indiabulls Housing crosses back about that 120 mark, 116 plus levels, that's where I believe a breakout could happen for the stock price. It's trading at 103. So if you're looking to maybe hold on to the stock, hold on, but then add or average over the 116, 120 odd mark, that could be a better level to try and play the momentum on Indiabulls Housing. Other than that, you can just keep on holding to your existing quantity.
Okay, moving on, and Mr. Prabhakar, coming to you for the next one. Dr. Shyam has purchased shares of RCF, 900 shares from a price of 120 rupees. The stock has shown decent move in the past 1 month, but going ahead, do you expect 120 to be achieved, and what are the targets that you're looking out for?
See, this stock has almost doubled in the last 2 years. It is because of the nano urea which the government has introduced, but this will take time for playing out. So I think for a long-term investor, it is okay, but next 1 year already, it is there in the prices. I don't think the stock is going to do additionally today. But FY25 is where you have to look, where nano for the urea is going to be the key theme for RCF, NFL also. So that is when it will start to perform. But already we have a mega run in the last 2 years.
This one is coming from Vishwanathan Nair. He's writing to us from Kochi, and this one is for you, Mr. Prabhakar. He wants to know if it's good time to buy Rajesh Exports for the medium to long term. Do you think this particular counter makes the cut to be in a portfolio?
Track the Rajesh Exports, so I will give a pass.
All right. Kunal, do you have any views on this particular counter on the charts?
Well, even I don't track it, but again, just scanning through the charts over the last, I think 4 to 5 years, the stock has been absolutely sideways. 2015 high the stock had made was around the 740 mark. Currently, the stock is at 557. So, the stock which remains to be in an underperforming zone over the last 5 to 6 years, I'm not sure that whether that stock warrants a buy in your portfolio. So I would suggest an avoid. And as it is, I don't track the stock very, very closely.
Okay, moving on, and Mr. Prabhakar, the next question is on Titagarh Wagons. This question, I beg your pardon, this question is specifically for Kunal, so let me come to Kunal for this one. Kunal, Vinay has purchased 500 shares at a price of 110. As we can see, the stock is showing great move in today's trading session at 52-week high. What's your advice? Should he sell this particular counter or continue to hold on?
Well, I think it's a good time to start booking out profits for Titagarh Wagon now. It's been one of the stocks from the railways pack which I've been bullish on. In fact, just about some 5-6 months back, when the stock was on the verge of a breakout about that 180 mark, we voiced out a strong bullish call over there. Now the stock has moved exceptionally high. It's almost doubled from those levels of 170, 175. I think it's a good zone to try and book out profits or start to book out profits over here at least because of the divergence the stock has from its long-term averages and the spike in volumes today which you're seeing. That could probably be an indication that maybe we are nearing a fatigue zone for the stock price trend, and the stock may remain in a consolidation or go into a correction. So good time, could look to book out profits or start to book out profits on the stock.
All right, this was coming from Padma Siva Rao writing to us from Bangalore. And Kunal, can he look to buy Kaveri seeds at current price for a period of just 3 months?
Well, I would avoid the stock. I think it's been an underperformer, a huge underperformer. I think the stock has, in fact, the trends for the stock has been consistently on the downside. The last time the stock made a high was around 800 mark, and from there, if you look at the patterns on the monthly charts, it's been consistently making a pattern of lower highs and lower lows. So because of the way the stock structure has been formed over the last 2 years, I would suggest an avoid.
Okay, Mr. Prabhakar, Sandeep is holding 100 shares of Laurus Lab from a price of 300 rupees, just at a mild profits right now. But in the longer term, what are the targets that you are looking out for, and what is the outlook?
I think pharma and pharma intermediaries. This is one sector which is underperformed in the last 2-3 years. So I think the bottom is in place. From here on, the performance will start to improve, and even the pricing power and the export to US has started to improve. That is what data is saying. So let us wait for the results. But once the results come, we will know the path forward. I think at least 25% upside in the next 12 to 15 months is possible in the stock.
This one is coming in from Vivek, and this one's for you, Kunal. Mastek, he's bought it at around 2,100 rupees per share, about 100 shares of Mastek. He's making some losses. We've seen the stock right now is doing cartwheels on back of its earnings. Stellar set of numbers coming in for Mastek. Now he wants to know whether he should stay put with this one or look to book out with losses. The time horizon is 6 to 9 months.
Stay put. In fact, I think a month or so back, we had done this Patshala on price volume breakout. Today is a classical sign of a price volume breakout for Mastek, where I would believe that this could be a signal of a turnaround. So maybe from here to the next 6 months to 1 year, you may see the stock going into a very gradual kind of a trend. In fact, if possible, and in case if the stock dips, say in the next 1 month or so, comes back towards 1650, 1700 mark, that could be actually a good zone where you should look to add or average further to try and reduce your cost price. So I would suggest that it's a very good time where you should look to hold on or build on to your existing quantity.
Okay, Mr. Prabhakar, the question is from Pradeep, and he wants to know, at current market prices, Voltas worth buying, is giving a worth buying opportunity, and he plans to stay invested for the next 1 to 2 years.
They have gone through a very painful period where white goods industry has not performed well. So, but I think everything is there in the prices. But with hot summers, a short-term rally can be possible in Voltas. But in a long-term perspective, I'm very positive. But 1 year is a very short time. Have the horizon as 2 to 3 years, then Voltas will be a beneficiary stock.
It's coming in from Ghosh Dada, writing to us from Delhi. Kunal, Adani Ports and Adani Wilmar, he wants to know how are the charts looking for these counters, because right now he's making slight losses.
Well, Adani Ports is apparently a better stock in terms of, so there are various characteristics which you look out for. Relatively low beta stock, a stock which is more sturdy in terms of price trends, a stock which tends to participate on the way up for the markets and which is not prone to too much of volatility. Now, in that basket or in that criteria, I think Adani Ports tends to fit in slight better as compared to most of the other stocks from the Adani pack. Even on the short-term charts, the stock is now on the verge of a minor breakout about that 665, 670 mark. So that could probably help the stock scale towards 720, 725. So even if you're looking at it as a short-term play investment, short-term trading investment, then I think you could probably look to pick up Adani Ports. That's a better stock.
Okay, Mr. Prabhakar, what's your outlook on Happiest Mind? The question is from Deepak, and he's holding shares of Happiest Mind from a price of 1400 rupees. Currently at should he continue to hold on this counter or average this at these levels?
We don't have a coverage on the stock, but it was expensive at 1400, but at current levels it is becoming attractive. But this is for a bit longer time, so you can hold on. The business model is very good, but valuation is still there are better valued stock where I will enter. But Happiest Mind at current level, I don't advise to exit. At current level you can hold on to it.
Okay, this one is coming in from Akshay. He's writing to us from Bangalore. He said that he's a long-term investor, Mr. Prabhakar, and he has high exposure to Nifty stocks in his portfolio. So he wants to know whether he can continue with Dr. Lalpath Labs. It's a mid-cap counter that he has compared to Apollo Hospitals or Narayana Hrudayalaya when it comes to the pharma exposure. What's your take? Do you think that this is a good way? Because even if though he's talking about pharma, he's talking about the healthcare space. So he has exposure to a diagnostic stock, but he wants to know whether he should also look at Apollo Hospitals or Narayana Hrudayalaya instead.
No, three stocks are very good. No, I don't know which choice to give him. But if I have to buy fresh, I think Apollo Hospital is the name I will select.
Once again, a query specifically for you. The question is from Bharat and he is holding two shares. Firstly is PEL at a price of 880 rupees and the other one is Hutco, entered at a price of 50 rupees. He wants to know, do you feel that any of these counters can give 20% return in the next 1 year? And what's your suggestion in both of these counters at this point in time? Continue to hold on?
Hutco is a better bet if you ask me, and the dividend yield is very good, and Hutco would do better. PEL is a complex business, so I don't track it. Complex business is something where I leave it away for better analysts to analyze that. So Piramal Enterprises is not my pick, but Hutco is a safer company, and dividend is also very good.
Now, a googly coming your way. This one is from Sudha and wants to know which is a preferred sector to go ahead and increase the exposure in the for the period of next 6 to 12 months. The sectors she's asking you, IT versus pharma. Which one do you think is a better sector to look at for the 1 year period? Because given the fact that both of these sectors underperformed last year and we were expecting both of them to make a good comeback. IT sector a bit wobbly because of earnings, but yes, pharma is holding the fort.
See, I think first things first, when we look out for 6 months, 1 year kind of a view in terms of sectors, we look at what's actually happening in the market rather than what we can anticipate what can happen in the market in the next 6 months to 12 months. Because in terms of sector play, you have to look out for decisive change of trend which happens into the sectors. Now, clearly, regards, pharma stocks in the pharma sector has made a very strong comeback. Now, whether it's the large cap pharma names, the likes of Cipla, for example, which have been consistently bullish on over the last 1 month, DV Slab as well, Dr. Reddy, which have done exceptionally well. So, there is a lot of confirmation. In fact, yesterday also we were discussing the pharma index, that how the pharma index is resembling what in terms of the breakout, what started off in 2020. For these stocks in terms of many indicators, which means there should be a long way ahead for the pharma stocks. But that doesn't mean that the IT stocks may not make a comeback. So maybe down the lines in the next couple of months or maybe in the next couple of quarters, you might actually see the IT stocks also making a comeback. But we'll wait out for that confirmation to happen. As of now, if you're asking me, I would give more impetus towards pharma stocks, and that's where I would probably defend the googly.
So basically, the pharma stocks is what you're saying to go with. So in mid cap, which will be your mid cap picks? Because you've given Cipla, Dr. Reddy's as well as DV's. All of them are in large cap arena, isn't it?
So yeah, I would prefer large cap names, but if you're still inclined towards mid cap stocks, then prefer something like Gland Pharma, which has made a very good comeback. Yesterday, the stock gave a confirmation of a price volume breakout. You might also look out for something like Zydus Life or Glenmark, which have actually given very good breakout for themselves on the monthly time frame. So these could be bets from the mid cap arena.
Okay, but switching to the real estate space now, and Mr. Prabhakar, the question is from Methi, and she's holding 50 shares of Godrej Properties from a price of 1750 rupees. Should he continue to hold on or average at these levels since she's sitting at a huge loss?
I think averaging in Godrej property will be advisable. No, in the starting itself, I said real estate is one sector which has started to do very well. And the kind of order book they have, the kind of property development they are doing, it is very good. So Godrej property can be averaged at current levels.
Mr. K. Parthasarthi, he's a senior citizen, Kunal, and he's writing to us from Chennai. 75 shares of BPCL at an average price of 475 rupees per share. HPCL 60 shares at a price of around 300 rupees per share. He's suffering losses in both of these counters and he's been waiting for an upside. Do you think it makes sense to continue to wait for an upside in these counters or should he book losses?
So I think you should continue to hold on to these stocks. Of course, these stocks have gone through their own phase of major correction consolidation, but then over the near term charts, because of the way momentum is shaping up, I would believe that there could be a potential 10 to 15% upside. So you could probably get a better level where you may look to exit or cut off your losses into these names, not at current levels, maybe another 10% higher, which could possibly be in the next 3 to 6 months for these names.
Okay, moving on, and Kunal, let me come to you once again. Shiva wants to know: is this worth buying Whirlpool for the next 3 months? How are the charts looking like, and what targets to expect?
Well, it Whirlpool has been an interesting stock because, in fact, I was culling out the data for the stock in the F&O side, and in the last 3 days, there has been a huge jump of open interest for Whirlpool, almost a 14 to 15% rise in the last 3 days, and nothing major has happened into the stock price, which means that there could be a possibility of long formation happening into Whirlpool. My sense is that wait out for a breakout confirmation. 1340 is the 1345 is the breakout zone for Whirlpool. So maybe another 20 rupees higher from current levels is where you could look to buy the stock.
Okay, just to reiterate, Kunal, we spoke about BPCL, HPCL. This is for Mr. Bala Subramanian. He has 361 is the buy price. What should he do with his counter then with BPCL?
So hold on to the stock. As I said, I expect at least a 10% potential upside for these stocks in the next 3 to 6 months. So maybe at 375, 380, if you do the math, we can probably expect the stock to land up to in that kind of a target frame, and that's where you could probably look to book profits.
Okay, and Kunal, if you are to hold a stock for 1 month, which would that stock be? This one is from Sandeep.
Tough one. So few names which are actually popping up on the charts. For example, the first stock which has actually given a confirmation of a breakout, or which is on the verge of a breakout, is City Union Bank. The stock trading at 130 odd levels. There's been some consistent buying which is happening into the stock. So that's a stock which I would recommend. AB Capital, Poonawalla FinCorp has been the other two names which I've been exceedingly bullish on, and I would still expect the stock to go into a major upside. I'm not sure whether that would happen in the next 1 month, but I'm pretty much confident that in the next 3 to 6 months, these stocks could be substantially higher from current levels.
Okay, moving on, and Mr. Prabhakar, the question is from Mr. Singh, and he wants to know, with the cotton prices coming down, can one enter Nahar spinning at current market price? And we are seeing all of these textile counters are also buzzing. So what's your outlook on this particular stock?
I think even the export order for many textile companies have started to increase. That China plus one has started to kick in into the sector. At current price, you can buy Nahar spinning.
Okay, this one is coming in from Krishna Kumar, and Krishna Kumar has 350 shares of Pfizer purchased at 4,395 rupees per share. Kunal, does it make sense for him to go ahead and average this counter right now?
Well, I would suggest not to average because of the way the stock has traded or behaved in the last 1.5 odd year. From 6,000 levels, the stock is at 3,700. In fact, I think last month or so the stock was sub the 3,500 mark. It seems like the stock is going through a process of a dead cat bounce, which could be indicated that there could be further selling in line for Pfizer over the near to medium term. So would not suggest to buy or average the stock.
Okay, moving on, and Kunal, this could be a tough one because the question is on Reliance. The earnings are tomorrow, and Sabyasachi is holding 800 shares from a price of 2,388 rupees, and he wants to know, should he sell Reliance at this point in time and book losses?
Trust me, all questions are tough, Srishti, but coming on to Reliance specifically, so, results is something which is not, my domain of expertise to anticipate which side the stocks would break out post results. But, I've, learned one thing, that when you are holding on to a quality stock like Reliance, you have to be patient enough, and specifically when the stock enters into a major support zone or a point where the risk reward is exceptionally high. Now, even if the stock is going through a spate of negative news flows, just to give an example, look at what happened to Tata Motors when the stock was at sub 400 levels. There was a lot of news flow which was negative for the stock price, but the moment the stock goes into a turnaround, that's where it becomes very difficult to catch on to the stock price. So same is the case with Reliance Industries. Not sure which side the results would, the stock would break out post results, but I would believe at current levels of 2200, 2300 mark, it's a very good zone where you should look to add, accumulate, or even hold.
All right, and if all the queries that we are asking all our experts are tough, then must say all are scoring like full marks and all of that, because given the fact all of our viewers are definitely benefiting from your views. But next one coming your way, Mr. Prabhakar, and our viewer has not written his name, but he wants a view. I think it's Mohan Rao, wants to know about Aditya Birla Sun Life AMC. He bought it at a price of around 450 rupees per share. He wants to know what's the future of the stock. Though on the charts, I'm sure that Kunal will have a very limited history to talk about Aditya Birla Sun Life AMC. But fundamentally, do you think it makes sense to stay put with this one, given the fact that we've seen what is happening with the AMC counters?
AMC counters, in the last, 2-3 years, they have not been performing. But, when you compare between AMC, I think, UTI AMC gives at least very good dividend. So the dividend yield also will be something which will which will give good return over a period of time. So I like UTI AMC followed by Nippon AMC, and then it will be Aditya Birla. So I have my choice. So that is a pecking order. We need to understand, AMCs are not business where you can see immediate return, but it is for a 5-year, 10-year period, not for someone who is looking at a short-term duration.
Okay, moving on, and Kunal, coming to you for the next one. The question is on Infosys from Manjunath, and she wants to know that after the recent correction post results, is this a good time to enter into Infosys for the long-term period?
So this may be a good starting point where you may look to buy, but I think on the long-term charts, one of the patterns which I have seen forming for Infosys is a inverted cup and handle pattern, and that pattern, either depth or the downside, could actually be closer to 1050, 1100 mark. So again, 10% higher from those levels may actually be a good starting point, and then possibly say in the next 1 month, assuming if there is another 100-point correction for the stock and it comes closer to that 1100 levels, that's where you can look to average further.
Okay, so that's the outlook on Infosys. But with this, viewers, it's once again to slip into a short break. But don't go anywhere. We'll be right back, and we'll be taking more of the stock-related queries. Stay tuned. Welcome back to Buy Now Sell Now show, where you get all your stock related queries answered, and this is the last segment of the show. So moving on quickly to the next query, and Mr. Prabhakar, the question is from Shri, and she is holding two paper stocks. Firstly is JK Paper from a price of 392 rupees and 60 shares of West Coast Paper from a price of 538 rupees at an average loss of around 4 to 5% in both of these counters. So is this a good time to hold on average, or what to do next? What's your outlook?
No, paper stock have done very well. So averaging is out of question. So no, but holding on, you can hold on to it. The results are likely to be good. But we need to understand, after many stocks doubling or tripling is where you are taking. That time the exposure should be slightly less compared to, and averaging at 4 to 5% loss is not a good thing for a long-term investor.
All right. Let's move on to the next query then, and this one is coming from Denny. He's writing to us from UK, and Kunal, he has ITC call option 405 at 3 is April expiry through 2 lots of it. He wants to know whether he should hold or exit.
I think we should look to hold on. I think the stock seems to have done reasonably well. It's taking its own time to break past about the 400 mark. My sense is that 410, 414 could be a potential near-term target range. So I'm not sure what price the call option could be at that point of time. But I think 410, 414 could be a good range. In case if the stock happens to come back quite swiftly in that kind of a range, that's where you should look to book out your profits on options.
Okay, Mr. Prabhakar, what's your outlook on Wipro? Mishra is holding 1,000 shares of Wipro from a price of 645 rupees, sitting at a huge loss. Wants to know your outlook for the next 3 to 4 years, and what should be his strategy? Should he average at this point in time, continue to hold on?
No, the company is not, there are many things which they are not able to put in place. So no, I would not venture into Wipro. No, my choice would be Infosys, TCS, Tech Mahindra, Coforge. There are, even LTI Mindtree would be something if I'm looking at a long-term prospects. Wipro, many things which they have to do right. I think they have not done it right. So I would avoid the stock at this point of time.
All right. This one is coming in from a viewer. This one is from Ravi Tega. This one, he's writing to us from Hyderabad. And Kunal, he wants a short-term target for Persistent as well as Varun Beverages.
So Persistent, I think the stock after a very strong upward trend and the last 1 month of correction, I think seems to have come back towards a decent support point, 4,000 odd levels. So on the upside, maybe a 4,750, 800, which was the previous swing high, that could be a potential target range which you can look out for. Varun Beverages, I would still believe that maybe the stock would go into a sharper corrective phase. So I think possibly the stock may come back towards 1275, 1200 mark. That could be a better zone to buy the stock rather than looking to buy at current levels.
Okay, just to the last query, Mr. Prabhakar, where you said that Wipro is in a void right now. Just wanted some clarity from the viewer's perspective. Should he sell at this point in time or continue to hold on? Any outlook on this?
No, selling, I don't think, the stock is, corrected too much. So selling at this point is not necessary. But if it starts to perform, many times when the IT boom comes, everything will start to rally. That is the time you need to get out. There will be some small loss if you have bought at a very high level. But this is not a stock for a very long-term purpose to hold on to it.
With that, let's actually kick start with the rapid fire then. And this one is coming from Sushil Kumar from Trichy. Kunal, for you, he wants to know whether he should sell Power Grid, which he purchased at 221 rupees per share, and look to buy Infosys or Tata Chemicals for a period of 6 months.
No, I would not suggest to make that switch right now.
Okay, Mr. Prabhakar, Mohit is holding 500 shares of ITC from a price of close to 200 rupees. His time horizon is for the next 3 years. Your outlook?
Hold on to it.
Okay, this one is coming in from RK. He wants to know which one to buy at a better price, Deepak Nitrite, Jyoti Raisin or NCC at what price, Kunal?
NCC would be a better bet. I think maybe just around that 100 odd mark or slightly lower than those levels is where it could be a very good buy level.
Okay, Mr. Prabhakar, PR Reddy wants to buy Indostar Capital Finance. Do you track this one? If yes, then at what price he should enter?
I don't track this.
Okay, Kunal, coming to you then, and this one is coming from Rao from Baroda. He wants to know about Axis Bank, 100 shares at a price of around 790 rupees per share. Should he look to add some more right now?
Yeah, you can look to add at current levels.
Okay, Mr. Kunal, DMart and Quest Corp, which one of this would you suggest for a buy? This question is from Praveen. Do you like any of these?
Yeah, Quest Corp could be a better buy purely if you're a high risk investor.
Okay, this one is from Poonam from Punjab. 888 shares of India Cements at a price of 198 rupees per share. Mr. Prabhakar, what to do with this one?
I think hold on, India.
Okay, Mr. Prabhakar, Tilak wants to know between Tata Motors and ITC, which one is the best one to enter at this point in time, and should he enter at current levels or wait for some correction?
ITC at current level he can enter.
Okay, Kunal, TTML is the stock, 555 shares at a price of 95 rupees per share. This is what Parth has purchased. What should he do with this holding right now?
Exit.
Mr. Prabhakar, Viju Phillips wants to know, is this a good time to buy KEI Industries for the next 2 years?
What industries?
KEI Industries.
KEI in cables. Yeah, it is a good time to buy cable industries.
Okay, this one is coming from a viewer who's not written the name. GMM Fodler can buy at current price the long term, Kunal?
Yeah, good price to buy at closer to 1500 levels.
Okay, Kunal, Jay Krishnan wants to know entry levels for Ultratech Cement, looking for medium term investment.
So I think 7,250 to 400 levels where it's trading right now is a good zone where you should look to start buying.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Mr. Prabhakar for joining us on the show, sharing your views on Tata Motors as well as telling our viewers what to do with their holdings. And with that, viewers, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, team that put the show together. Stay tuned. Markets at noon coming up next with Anisha and Somit.